Good afternoon, everyone. Welcome to this webinar on case study of Jhabua Power Resolution under IBC, organized by Committee on Insolvency and Bankruptcy Code of ICI. This is part of case study series, which we do webinar on successful resolution cases under IBC. We have with us the chairman of our committee, CA Gyan Mishra ji, the speaker for the session, Shri Abhilash Lalji, and the moderator for the session, CA Dr. Kishore Kumar Pahuja ji. Welcome to you, sirs. Now, I would request the chairman of our committee, CA Gyan Mishra ji, to please address us at this very important occasion. Over to you, sir.
So much thank you, Rita madam. First of all, welcome back to the work. As I understand that you have not been well for last few days, but despite of your health, you are totally dedicated to the committee, and the tremendous work you do that really deserves a great applause from all of us. Very respected Abhilash ji, who is a speaker who will be technically guiding us regarding the resolution of Jhabua power resolution. Moderator of the program, Kishore ji, and of course, Rita madam, and very respected all the delegates. Good afternoon to one and all. Friends, it's always a privilege to discuss the new developments with the delegates, and of course, as we all know that this law is very new, for last 6-7 years old only, so it's always very scope to learn. And as far as the resolution is concerned, each resolution plan has its own intricacies to understand, and each one is unique and special. So to discuss with the resolution plans which have been approved, it is really a pleasure, and such wonderful resolution professional like Abhilash ji, he will be deliberating us on this Jhabua, and a wonderful moderator also, Kishore ji. So friends, I will not take much time. You understand that a lot of work of the committee, probably you know or you don't know, we people keep on doing some this monthly this knowledge capsule, one corner being published by the committee, in which you people can become resource person with respect to the writing on various issues, various rules, regulations, or with respect to the resolution plans, etc. Other than this, we understand that this program, which is a certificate program, I'm happy to share with you that this is really going very wonderful program in coming time, and such great response from all the members across the country that we initially started with 100 people. Then again, the next batch, 100 again filled. That has been increased to 150 again filled. Now we are increasing to 200, and I'm sure that by today evening that will be filled. So the way the professionals are responding to the this insolvency arena, this is really very encouraging. And in coming time, as Honorable Supreme Court has come out with the decision with respect to the insolvency of the individuals, so that will certainly open new arena of practice for the chartered accountants and of course the resolution professionals in coming time. Friends, I'll not take much time. I compliment the committee and welcome all the respected speakers and moderators and all the respected participants in this program. And I am sure that this knowledge enriching session will keep on going under leadership of Rita madam especially, because her tremendous work we are witnessing in the committee. A long way has to go, and I'm sure that we will keep connected for knowledge enriching sessions and knowledge dissemination in coming time. So over to you, Rita Madam. Thank you very much.
Thank you indeed to you, sir, for sharing your thoughts with us and especially highlighting the important activities of the committee, including the forthcoming certificate course on IBC, the overwhelming response of the members. Under your leadership, we are taking care of the various activities under the committee, and we will also do this kind of webinars and other activities in the coming months also. Thanks to you, sir. And before going to the session, I would take this opportunity, sir, with your permission, to introduce the speaker and the moderator for the session. The speaker is Shri Abhilash Lalji. He has done his MBA from IIM Bangalore and is BE Mechanical. He has over 32 years of experience in financial services, consulting, private equity, and industry. He has executed long-term consulting assignments across real estate, education, healthcare, and strategy. He has worked across various functions and roles in corporate banking, including stress assets, institutional and private banking. He is a certified insolvency professional. He is currently an RP of one of the largest hospitals in India. He is an IRP for one of the airlines. He has handled various assignments under IBC. Now, I would like to introduce CA Dr. Kishore Kumar Paujaji, who would be moderating for the session. He's a chartered accountant and also an insolvency professional. He mainly deals in company law matters, audits, and taxation. He has passed diploma in insurance and risk management and completed PhD in behavioral finance. He has passed social auditor exam and registered as arbitrator with Indian Institute of Arbitration and Mediation. He is also empaneled with the Indian Institute of Corporate Affairs for Independent Director. Welcome to you, sirs, again. Now, I would request Kishore Paujaji to please share your initial remarks before you hand over the session to the speaker, Abhilash Lalji.
Thank you.
Over to you, Kishore.
Yeah, thank you, Ravindra. Thank you for the introduction also. Though we have a respected insolvency professional, Shri Abhilash Lal sir, who would deliberate on the case. But as a moderator, let me brief about the case. This is very interesting case from insolvency professional point of view. Jhabua Power Limited. Very briefly, I'll just say, Jhabua Power Limited was a company promoted by Avanta Group and having its registered office at Kolkata. This was a power generation company having its plant at village Barela of Tehsil Gansur district Seoni. It was in state of Madhya Pradesh. It is an independent producer having 600 megawatt coal-fired power plant. The plant was commissioned in 2016 with a delay of 3 years, with several critical capex work like railway siding, wagon tippler, plant roads, drains, etc. is still incomplete and inadequate, essential and mandatory spare parts in its store. JPL had 85% of its power capacity tied up through long and medium-term power purchasing agreements with various governments like Madhya Pradesh, Kerala, and West Bengal. JPL was accredited with various ISO systems also, occupational health and safety management, energy management system, etc. JPL regularly faced the issue of coal availability, hence couldn't ensure full declared capacity to the PPA beneficiaries, thus getting a hit on the fixed cost tariff invoicing. The company faced several arbitration claims even before entering CIRP. The major one with the key boiler turbine generator vendor, BHEL, that is Bharat Heavy Electricals Limited. This led to a serious issues with plant maintenance, running, and safety. JPL struggled in inventory management for mandatory spares due to insufficient cash balance, with inadequate spares for extremely critical machinery. For example, turbine blades, etc., were not available at all. Due to improper budgeting and liquidity crunch, JPL was unable to meet its requirements for the salaries and other employment and engagement expenses also. With several important capital items left unfinished, roads, rail siding, wagon tippler, drains, etc., JPL faced regular issues in normal operations that pushed up the cost of repairs and operations. Coal supply was also too erratic. The company also faced financial stress due to significant delays in start of commercial operations of the plant. Cost overrun led to substantial increase in debt. The debt could not be served through the cash inflows, and the lenders started charging penal interest, which further aggravated the servicing problem of the company. high financing cost of long-term debt was unsustainable for JPL given its cash flows, low plant availability due to absence of critical spares and incomplete works, working capital constraints due to purchase of coal and meat operational expenses. In pursuance of insolvency application filed by an operational creditor, Mrs. F.L. Smith Private Limited, NCLT Kolkata admitted JPL into corporate insolvency resolution process on 27th March 2019. The Committee of Creditors in its first meeting appointed Mr. Abhilash Lal as the resolution professional, who happens to be today's speaker also. He and his support team successfully completed the CIRP of the company. The team, with the support of stakeholders, continued and improved operations of the power plant and reinforcing the going concern status of the corporate debtor. This enabled the team to market the company, generate interest, and obtain compliant resolution plans before handing it over to NTPC Limited, the successful resolution applicant. During the CIRP, the resolution professional, along with the support team, managed to maintain the company as a going concern as per the provisions of the code, and also successfully transformed business operations, leading to superior performance and achievement, lifetime high operational and financial milestones. The RP submitted resolution plan of the successful resolution applicant for consideration of the adjudicating authority, that's NCLT Kolkata bench. The plan had been unanimously approved by all the members of the COC. Upon approval of the resolution plan application by the AA, the CIRP of the CD was concluded and the CD was successfully transferred to the successful resolution applicant. During the transition period, a monitoring committee comprising representatives from the lenders and the SRA and headed by the RP monitored the operations and the transition process as per the approved resolution plan. We are delighted and privileged to have with us Mr. Abhilash Lal, the insolvency professional of the case, to enlighten us on how he and his team helped to resurrect the corporate life. Over to you, Abhilash Lal, sir.
Thank you. Thank you, everyone, so much. Mishraji, Pahujaji, Rita ma'am, ICAI, and the committee, thank you so much. It's a privilege to be here. And, I'm almost blushing at the kind of adjectives that are being showered. I do hope I am able to provide some inputs to you. And I hope you go away feeling that, yes, this was 2 hours worth spending. Otherwise, post-lunch sessions, I know, can be extremely boring, right? So I do have a few slides, but I don't plan to make it a kind of a slideshow. We'll have more of a talk session. And what I would like to do is firstly take you through what the CIRP was, what we managed, how, and then later on, the second part, move on to the RP perspective. What are the challenges? What is my viewpoint? What are the things we should be prepared for? What are the pluses, minuses, everything that comes in? And I think a very major objective of today's session is to make sure that you understand these areas better. So please feel free to keep sending in your questions. I'll try to keep aside, more time, and we'll try to address as many of your queries, doubts, whatever there are, right? So, and before I continue, just one correction in your introduction, Rita ma'am. I was the IRP. And in line with CIRP regulations, I have been replaced by the RP now for the airline case. Yeah, so I think when we last spoke, I was, but time and law wait for no one, I think. So, yeah, I have moved on there. Unfortunately, that's going to be another problematic thing, and probably, the subject of a more 4-hour session in one of your meets like this. So very quickly, just let me, I hope my screen is visible.
Yes, sir.
Yes, sir.
Yes, sir.
Great. Thank you. So I think Kishorji has kindly given some background here already. And a lot of the things here, including some dates, are here. And don't bother, I'll be sharing this presentation with for your personal consumption only, not to go. But so don't bother to write down or anything. But there are a few important things that we must notice here. The Thapar Group had originally envisaged this as a 1200 megawatt power plant. And that is why you see, unfortunately, the moment the 600 megawatt first phase was commissioned, right, and this was just about entering 50% of its overall capacity, it was admitted into CIRP. As Kishorji rightly pointed out, there was a delay of more than 3 years, which led to a cost overruns. But on the plus side, the company had tied up almost 85% of its capacity through long and medium term PPAs. Now, for those of you who are familiar with the power business, you will realize that PPAs are extremely important for the long run sustainability, even profitable operations of any power producer. So suffice it to say that I think PPAs are the bread and butter, and then whatever you can get by way of your additional capacity, I think that is the jam that is provided to the power producer. So thankfully, the company had PPAs. Of course, it's another thing that the two major PPAs, the states of Madhya Pradesh and Kerala, the second one, we were facing a huge amount of litigation. I'll come to that later. The RP's role, as you're all sure, I'm sure you've heard of, is to keep the company as a going concern. That is all that the IBC speaks about. Unfortunately, what this entails, what all is required from the RP, that is something you learn only when you actually jump into the corporate this thing. I personally feel that the RP has three major roles to do. The first is obviously that of a resolution professional, where he has to run the corporate insolvency resolution process or CIRP, run it to its logical conclusion as required by the law. So that is the first role. The second role, and which I strongly recommend that RP is done on, is that of an investment banker. See, the success of the CIRP, IBC, and even the RP's efforts, unfortunately, is measured in only one thing, and that is the price or the amount that you were able to sell this for. Now, obviously, the state of the assets of the corporate debtor, the state of the business are very important on this. But therefore, what the RP can do is two things. One is demonstrate that the corporate debtor, the business of the corporate debtor is not as bad as it looks. Yes, the performance has been bad, and that is why the corporate debtor has been pushed into insolvency. But if one can show that, yes, the insolvency was due to factors other than the basic business model of the company, that is something which goes a long way in convincing potential buyers. And the second thing, they always say it is not enough to be good. You have to be seen to be good as well. So you really put on the investment banking hat there and try to reach out to as many people as possible. Obviously, relevant people, people who you think would be interested in an asset like this, but who have hitherto stayed away, thinking that it's not a good asset, it's an NPA, there are problems, etc. So as an investment banker, you have to go ahead and try to display all the positives of the corporate debtor. Of course, you have to mention all the negatives also, but net demonstrate that the value proposition is there for the taking, and should somebody be interested, there is value that can be generated. The third part in investment banking is, and I'll be looking at this especially because it was important for Jhabua, is what form can the resolution plan take? I mean, yes, it is easy to say that the creditors' dues were 100 and we have received 80 or 90 or 100 as cash. And thereby we try to determine that, yes, what has been the successful recovery, even though recovery is not the objective of the IBC. The first objective is resolution. What usually happens practically is that there are relatively few resolution applicants who will come and offer an all cash settlement. It may not make sense. So typically, there are resolution plans which comprise cash payment. The cash payment could be upfront or over a period of time. It could be conversion or through issue of some kind of debt, secured or unsecured debt. And there is always the option of providing some kind of equity which is available. So resolution plans typically can have either of these or two or more of these as well. So as an iBanker, you have to be able to understand and explain to lenders, the COC members, which plan, what does it mean, which plan therefore would be closest to their assessment. And obviously, you would have done this while preparing your expression of interest, your RFRP, and also, very importantly, your evaluation matrix. The third role, the third hat that an RP wears is that of the CEO. And it is, as the CEO, the RP tries to maintain operations as a going concern. As I said before, that is something, easier said than done, because only when you actually get into the corporate data, when you start taking over the operations, you understand how difficult it is to handle all these things. And this is where, unfortunately, there are no guidelines, there are no books, there are no models or no cheat sheets where you can say, okay, if we look at this, then we will be able to keep it as a successful going concern. So this is something where your ability to think on your feet, your ability to separate the wheat from the chaff, your ability to focus on to important areas versus not so important areas becomes extremely important. I must say that personally, I have found this profession to be one of the most interesting I can imagine. I have been the RP for a hospital, a large hospital. I have handled an airline for a while. I've handled a hotel for a while. I was handling a real estate project. Obviously, I was handling this thermal power plant. If you look at it, each one of them occupies a very different area in the industry altogether. Each of these industries have their own ecosystems, their own suppliers, buyers, their own idiosyncrasies, their own jargon, their own way of doing things. And on the one hand, it can be extremely challenging. You have no idea what is going on. I am very fond of saying that when I took over the hospital, I did not know the difference between dyspepsia and dyspyrin. When I took over the thermal power plant, I was learning new terms every day. I had no idea what STOA was, what gross calorific value is, what plant load factor was, what station heat rate was. But this is where your ability to understand the key components of business becomes very important. And if you look at it, it's very simple. It's input plus conversion resulting in output. And if your input plus conversion is lower than what you are getting as output, you will remain profitable. And if it is higher, you will get into a loss loop. So it seems very simple enough, but where the real challenge lies is the ability to come in and understand what the key components of this simple equation are. Now, in thermal power, for example, by far, I mean, yes, capital cost is important, but by far the most important input is that of coal. And therefore, once you understand that, yes, what the mechanics of coal supply are, and this is divided into three parts. We have coal quantity, we have coal quality, and we have coal delivery. And I will explain why delivery is important. So once you understand this, then you move on to the second one, and that is my conversion. And conversion, thankfully, it would appear that in a thermal plant, you don't have to do anything. Just pour coal onto one side and you will get power at the other side. But unfortunately, there are a lot of key issues here as well in terms of how to manage, how to show uptime, how to ensure that you remain synchronized, how to ensure that you balance your output with the demand, what do you do with the extra demand, and very importantly, how do you manage the stoppages, the critical spares, etc. Because the nature of the business is such that you will not have a 5 minute or 10-minute halt or stop. You will not even have a 2-3 day stop. When a thermal power plant stops, you are looking at least 3 to 4 weeks of downtime. So everything that you do has to be with this in mind. And the last part is the output, the sale of the power that you are producing. Now, one can think that, yes, if I have my PPA, 85% of my money is tied up. Unfortunately, PPAs are not structured like that. It is not just, okay, you will provide power to me at this cost. There are a lot of intricacies involved in that. And without getting into the details, I'd just like to simply explain that you are supposed to show your readiness to provide, or what is known as availability. You have to provide to be able to claim your fixed costs. And then over and above that, depending on what your customer is taking on, will be paid on there. So it is critical that you remain available at least up till that crucial level, and you provide power when it is required to the extent needed for you to start making profits. See, a PPA doesn't mention that we will require so many megawatts and this hour, so many megawatts in this hour, it doesn't. Nobody can make that kind of prediction. So when you provide your plant availability, the buyers will come back with a kind of a buying plan saying that this is how much we plan to take from you this month. And therefore, you have to juggle all these things to make sure that you are providing at a level where you are making profits. The surplus capacity, you have to try timing the market. It's like a bit like a stock market. You sit on the energy exchanges, you try and see where the power rates are going and try and sell them over there without obviously impacting your PPA commitments. So these are the things that you have to handle. And touch wood, I was extremely fortunate. I had taken a very good team from Alvarez and Marcel, who are my IPs for most of the cases that I handle. And we did actually take on somebody who had run a plant operation earlier. But having said that, a going concern means that the management team of the corporate debtor is available. They have to report to the RP. That's what the law says. They have to continue doing their job as per RP's request. But, actually getting them to do it is a far more difficult thing. And this is again a place where your ability to think on your feet, your ability to manage people, manpower. I think this is where the term management comes in. Managing everything else is possible. Managing human resources, managing people is a very different kettle of fish altogether. The last part, which becomes important, is the RP is a bit like a CEO. He is the CEO, and just like the CEO works under a board of directors, the role of the board of directors is, to a very large extent, done by the Committee of Creditors or COC. You are all aware that the powers of the board of directors are suspended. Those powers are actually wielded, most of them, especially in terms of strategic direction, in terms of finances, etc. They are handled by the COC. And from a legal and regulatory perspective, obviously the adjudicating authority and the regulator, they handle this. So you have to learn to manage the COC as well. And I'll share that as we go along. So over here, with this background, very quickly, so what we had to handle was the entire CIRP, which meant claims, management, statutory requirements, etc. Because these are extremely important under IBC. Then comes the actual management of the plant, which is end-to-end operations management, all commercial matters. Any running organization will have its own legal issues, will have its own MIS requirements, and we actually worked on the MIS requirements to make sure that we were getting the key results here. Cash flow management becomes extremely important, especially in companies that are under CIRP. We were extremely fortunate that this company, Jhabua Power, remained profitable at a EBITDA level. And therefore, it was possible for us to meet all company expenses, especially salaries, etc., without trying to raise external funds. Where we are proud of is that when we started, the EBITDA was 7 crores a month. And when we left, it was in excess of 50 crores. Of course, this process took slightly over 2 years. Unfortunately, COVID came in right in the middle. So while COVID, one can argue that we had more time to improve operations because of COVID. But COVID provided its own challenges, and we'll cover those as we go along. And then finally, of course, we were brought in to implement the resolution plan as well, what is known as the monitoring committee in operational circles. Monitoring committee is not defined in the IBC, but given that nobody is going to give you all the money on day one, there is a process of handover. You are aware that the CIRP ends the moment the resolution plan is approved by the adjudicating authority. So what happens to the period between approval of the plan by the AA and till the final payment has been made by the successful resolution applicant? So this process typically can take between 1 to 6 months. And this process is where, the lenders cannot let go because they haven't received the full payment. And at the same time, the corporate debtor cannot do things that the buyer doesn't want because he will be inheriting that. I often liken this to, it's like if you have a car and you have sold it to the buyer, you have reached an understanding. The buyer says he will come next week with all the money and take the car away. During that 1 week, what can you do with the car? Can you change its color? Can you change its tires? Can you take it on a big road trip, which will take a few thousand kilometers? Or on the other extreme, can you just lock it up in one corner for 1 week and let it gather dust, or maybe even have the battery run down? So this is a crucial period where I would say that I will use the car sparingly to make sure it remains in running condition, and I will keep the buyer informed of that. So that is the role that the monitoring committee does. Yes, the agreement to sell operations has been reached. The formalities are yet to be completed. So while you cannot let go of the corporate debtor, the lenders cannot let go, you cannot do things that the buyer may not like. So this monitoring committee phase was also entrusted to us, and that is something that really tested all my knowledge of debt and equity, and I'll cover it shortly when we go. Now, in terms of what we thought were the important things that we had to handle, as I mentioned, there was the CIR process. I'm sorry, Paujaji, are the slides clearly legible, or is the...
No, it's okay. Perfect.
It's
quite
clear,
good,
sir.
quite good, sir.
All right, okay, because I suddenly realized I have some small type on this page.
No, it's perfect. Very good.
So the CIR process, of course, where you have to handle the operations while pursuing the CIRP, you have to manage the entire resolution process. I've mentioned you need to obviously issue your expression of interest, issue the RFRP, do your investment banking for reaching out, making a teaser, making sure people are aware, basically packaging it and say what a nice deal this is. We will gift pack it. There is the VDR requirement. I have specifically mentioned because providing of information is key to make it successful. And at the same time, you have a regulatory sword also hanging over you. You don't want anyone to say the other party was given favor, other party was given more information, other party was given inside information that we were not aware of. And therefore, it's extremely important to store and disseminate data properly with proper logs and information. And that is what is done well through a VDR. You have to develop the detailed information memorandum. Very important part of any CIRP is the claims management. So you have to invite claims, you have to verify the claims, you have to confirm the claims. Obviously, your COC and their voting power will be on the basis of financial creditor claims. And same thing with operational creditors, you have to have a confirmation of what the outstanding the payment is. There is one small digression I'd like to make here. In his opening remarks, Kishorji pointed out that when it came over, there was a lot of litigation already going on. And that primary litigation was to do with the BTG supplier, the boiler turbine generator supplier, which was going on with the BHEL. A very interesting thing comes across, and I apologize if you know about it. So I'll mention it in short, and you can always ask a question if you want it more detail. So what happens is when a matter goes into litigation or arbitration, typically in very simple terms, like what happened here, BHEL will say we have not been paid, this has been delayed, this has not been done, and therefore we need to recover an amount of, let's say, 500 from the corporate data. No corporate data will allow this to come in as a pure claim. They will in turn go and file something against it and say, look, this delay has happened because the supplier did not do its job properly. They should have erected the base here. They should have done all the foundation work properly. The turbine should have come on so and so date. It should have been assembled with proper testing, assembly to right. The overruns were there, and therefore, actually, instead of us owing 500 to the supplier owes us some money. So this is something that happens, and you will find this in most CIRPs. So let us say the supplier has claimed 500. At the same time, we find that the corporate debtor had also gone and claimed, let's say, 400. I'm using these terms as examples. What is the RP supposed to do that? Because the moment the public announcement comes out, the supplier will lodge a claim saying, please pay me my 500. And this is where the fun comes in. The RP cannot verify that claim as 500. Obviously, he cannot say that the corporate debtor's counterclaim is also correct and therefore claim it at 100. And the judiciary has been very clear that this is a judicial matter. And the resolution professional has absolutely no judiciary powers or arbitrary powers whatsoever. So the RP is usually stuck. I can't say 0 because there is a claim. I can't say 500 because it's only theirs. I can't say 500 minus 400 because we don't know whether the litigation or the arbitration will identify accept or no. I mean, had it been that simple, had it been that much white and black, there would never have been a litigation in the first place. So normally, and this seems to have become a practice, I think this was first done by Satish Gupta in the CIRP of SR Steel. I did it next in the CIRP of Seven Hills, and since then, I'm happy to see that it has become a accepted practice. The resolution professional enters that claim at a nominal value. We typically use 1 rupee. Understanding fully well that the RP has authority at all, and therefore we enter it at 1 rupee and put in an asterisk saying this issue is currently under litigation. Okay? And all necessary papers related to the litigation to this particular case are provided in the VDR. And in a classic example of caveat emptor, buyer beware, we simply provide all the information to potential buyers, potential resolution applicants, and tell them you are free to draw your own conclusions from this. You do your tenability, you try to figure out who is stronger, how much money you can get, not get, work it out, and then make a bid accordingly. And now, obviously, it has come out now that, they are expected, most resolution applicants are expected to also put in treatment of such claims as part of their plans. Because at the end of the day, if my counterclaim is recognized at 100, I will have to, at 400, I will have to pay only 100. And if my counterclaim is dismissed altogether, I will be in the dock for almost 500. So this is something that the RP cannot decide, not just lack of power, but also a lack of time, because he has to finish this in 6 months. And therefore, let the buyer beware, let the buyer understand what is to be done and report. The last part here you will see is progress reports for the NCLT. All adjudicating authorities typically ask for regular updates on what has been happening. Since this was a power plant and we had the major power financing corporations as lenders also, there was a huge chunk of MIS requirement in very minute detail on all operational parameters, but also we had to give a full update to the adjudicating authority every month. So that is something that needs to be done. Business operations, performances and compliances, we have to go and check insurance policies to make sure that all coverage remains active during insolvency period. Please look at all long-term contracts because, to go back to my car example, I am supposed to finish the CIRP in 6 months. If a 2-year, 3-year contract comes up for renewal in 3 months of the CIRP, what is the RP supposed to do? Should he actually sign something for 3 years, knowing fully well that by doing so, he is committing the successful resolution applicant, is binding him to that. So these are issues that you have to keep in mind. Normally, what we try to do is try to extend it for as short a period as possible and explain it to the service providers or the vendors that we cannot extend it for the longer period that you are asking for. A very good example of this is that you are all aware that the Ministry of Environment has been coming down very strongly on thermal power plants and asking them to put in place what are called FGD systems, whereby all emission gases, etc., are brought down to far more acceptable levels. Now, this FGD is typically a 2-3 year project, and it will set you back at least a couple of 100 crores, if not more, at least. So, one issue I faced was that, yes, this Jhabua was due for FGD installation, and the Ministry of Environment was getting after us, and they don't bother with moratorium. They say, you are polluting, you'd better do something about it right now. But the issue was that which FGD do I choose? If I were to choose A, it is possible that a buyer will say, I have this model B for all 5 of my plants. Why should I take A? You are tying me unnecessarily to someone else. And this is not something that you can, take it out and remove. You have to make sure that it remains flexible enough and yet fits in with the plans of as many people as possible. So these are the things that we have to handle. We made representations to the Ministry of Environment. We did some other things. We tried to make sure that what the smaller things towards covering pollution levels were, we were fully up to date there because they did not require a large amount of capex or long-term contracts. And we somehow managed to get there okay, that yes, we will give it some time and we will let the successful RA come in and implement the FGD. Inventory tracking and maintaining it is a very important thing. And one is, of course, your reorder levels and reorder time, the time period, etc. But in continuous operation industries like thermal power plants, the criticality of parts also becomes very important. There are parts where if they shut down, the whole plant will shut down. The turbine, of course, is a very big thing altogether. And it is a fact we actually ordered and bought a secondary turbine because we knew that if anything goes wrong and anything can happen to a turbine in a thermal power, we would have no option but to shut down the plant for at least a few months. Because the typical lead time for sourcing a turbine, again, depending on size and make, would be from 7 months to 1.5 years. So you have to look at that criticality and make sure, even if it means that you have some money lying idle, I think you do a cost benefit analysis and see what is worse, the cost of one turbine extra sitting for me, or the cost of penalties I will incur if I do not provide power as per my contracted or my contractual responsibilities. So those are the kind of things we did, and we actually set aside some money to pick up and get some key critical spares there. I've already mentioned the monthly MIS. Cash flow management is very critical, and there is, more than a financial, there is a human angle to it as well. See, I'm sure all of you can understand and appreciate that when a company is admitted as being bankrupt, it is extremely demotivating for the employees because they have two or three things. One is most of them think, oh, I am now working for a company which is, kind of blacklisted, or, we have a bad name. What will happen? Everyone is asking me. The second thing they get is a huge sense of insecurity. Will my job be there? Will the company be around? Am I wasting my time here? Or should I start looking at something else altogether? And this can be a huge challenge for the RP. If good people, and good people will also always have demand in the market. If good people start leaving, there is no way you can run operations efficiently. So cash flow, and I'll tell you where the link is. One is, of course, please ensure that everyone's salaries, etc., are done on time. For the CIRP, which went on for more than 2 years, believe it or not, I had to do 2 full cycles of annual appraisal and increment and promotions. Because if you have to tell your human resources, your people, that don't worry, everything is fine, RP is here, he will take care of everything, please start demonstrating this. This is not the time to come and say, sorry, your salaries are going to be delayed. Sorry, no increments this year, the company is not. Somebody who has worked hard, and there are people who have to work very hard in a bankrupt company to bring operations up to at least, acceptable levels. So these things have to be done. Over and above that, and I'd like to show you, is that, there has to be a feeling that we are doing well. If we demonstrate that what this company is really capable of, this company will definitely find a good buyer. And that is very important. So believe it or not, we actually started setting aside money that we were making, EBITDA level. Of course, we started improving it, so we had more and more money, to make sure that we did a lot of changes that were very visible to the eye. And this is something as simple as, not having rundown offices, or, completely listing buildings, things, etc., roads. In fact, I'd like to show you a few photographs here of what all we did, just to bring up the confidence levels. But over here, I must mention that the moratorium is actually a great help to the resolution professional. Because of the moratorium, the corporate debtor doesn't have to run around trying to pay off all the debts, etc. I'm talking about financial debt, servicing loans, etc. nor do we have to waste time fighting so many different cases that may have been lodged. And whatever would have been used for servicing the debts now can be utilized effectively in the company itself. I mentioned that this is very important from an HR perspective in terms of retaining motivation levels, telling people all is well, that yes, things will go on. But from an operations perspective also, it has a very good positive cycle. You improve the infrastructure, you are able to get better output. Better output results in more money. More money means you have more money to put back into the operations, try to improve things further. And therefore, from a very bad negative cycle of bankruptcy, you move into the positive cycle over here. I'll just digress very quickly here. And I'd like to show you, there were 3 or 4 very key items that had not been completed. I think Kishorji also pointed out that, things like rail siding, things like infrastructure, a simple thing like boundary walls, simple things like internal and external roads, etc., they had not been completed. So critical capex had not been done before it went into it. We actually set aside a lot of money. Of course, we had to take approval from the COC, extremely important, and I'll come to it. Right? Please go around and do this because all this will result in a positive spin to the operations.
Sir, excuse me, are you showing any photographs right now?
Yes.
Yeah. Now it's visible. Earlier was not. Yeah, it's okay.
It's coming. Yeah. Right. So just a few photographs I'd like to share with you. These are some internal roads. What was the situation? And before I mean as on ICD. And this is what we did during the CIRP. Now, in addition to bogging down trucks, delaying deliveries, creating problems, bad mood all around, it gives you a very positive sense that yes, we are also, a compliant, efficient thermal plant. And as I mentioned before, it helps to improve the turnaround of the trucks. Therefore, it helps to cut down my cost, and therefore it improves my profitability, my income, and therefore I am able to go ahead and utilize that money to improve other factors. These are some of the internal roads. This is the coal feeding belt, which goes into the boiler. You can see that building in the corner, the tall building is the boiler. And believe me, this road had not been built at all. We actually spent money just to prepare these roads. Some of them had been left undone. There was a small bridge that had to be constructed on the other side over the culvert. This is the other side of the same thing that we were talking about. Completed the road. There are some other roads, simple things like, there is a small township there. So simple thing like people commuting from home to office, that also, can have an impact on your motivation and morale. And therefore, we went ahead and did this. This was a major project we had to carry out because there were some obligations to the district administration as well, internal, external. So not only were we completing things like drains, etc., which are important for internal look and feel, but also meeting our obligations, because every district, as it is, district administrations are always cribbing. You have so many trucks coming in, your trucks are overloaded, your trucks are destroying the roads. Your incoming trucks are spewing black coal dust everywhere. Your outgoing trucks are throwing ash, your burnt coal ash all over the place. So at least we have to tell them that yes, we mean business, we are taking care. And this is also one of the parts that we use with the Ministry of Environment to get that extension for our pollution requirements. Drains, external roads had to be changed. We had to change them. These are just some of the roads that we worked on. A very important component of any thermal power plant is the supply of coal. We were buying 2 rakes or racks, as the people call it, of coal every day. Just to explain to you, rake is actually 60 pieces. So there are 58 wagons of coal each. And then 59 and 60 are the engine and the guard wagon. So all these earlier on were coming to an external siding. And external siding is where the coal train would come. And we had the backhoes excavators, as you can probably see, which would manually remove the coal. The coal would lie on the side of the siding and then come to trucks. And the trucks would then bring it into the company. So obviously a lot of expense and a lot of threat that, there is obviously going to be a loss of coal. It stops, somebody from coming along with a sack. All right, here's coal for my dinner fire and walking away. How much can you petrol and secure? So this was being done. So one major thing that we did was a rail siding, a rail track coming into the plant had been approved. It had not been constructed. We completed the construction. We completed the electrification of that. And very importantly, we managed to install what is known as a wagon tippler. A wagon tippler, very simply, is a large machine that when a goods wagon comes in, it just holds it on both sides, turns it over, all the coal falls off, puts it back, and then moves on to the next thing. The unloading of a coal train in this actually comes down from 2 hours per wagon to something like 7 minutes per wagon. And therefore, you are able to reduce your demurrage payments to the railways as well, because the railways will charge you. They're saying, we sent you a rake, you were sitting it for so much time, not our fault that you didn't unload or load it, and therefore you have to pay extra. So a simple thing like getting this siding and wagon tippler commissioned can have a major impact on your costs. On the HR front, yes, it is a matter of pride. This is one of the very, very few coal plants in that area which uses a wagon tippler. And as you can no doubt imagine, for a plant under bankruptcy, we were hiring quite aggressively. I mean, we needed people to run the wagon tippler, to run the control room, to manage all these logistics, etc. So all these things, therefore, can be imagined. This was something that we had completed. This is known as the ash dike or the ash pond, where we have to go about doing it. So all of these things have a major impact on the overall performance of the company and therefore the success of the CIRP. The last part, of course, is the implementation of the plan, and I'll cover that. I've already mentioned this was under the monitoring committee period. Very quick background on how did we go about this? What are the key things we looked at? So I've broken it down into 3 or 4 areas. One is, of course, managing plant operations and the overall business. Now, this, of course, meant that we had to look at the entire management in the current business and try to supervise them and make sure they knew what they were doing. We examined very well the improvement in coal stock, the critical spare parts, capex requirements, etc. As I've already mentioned, we analyzed our PPA agreements to understand what were the key levels at which the plant had to operate if it had to continue operations profitably. It's not enough to continue, it's enough to continue operations profitably. And as you can see, I don't know, Kishorji, are the graphs
Yes, sir. Yes, sir. Visible.
Yeah. So without getting too much into the technicalities, two or three key things are plant availability, which you have to declare, because the more plant availability you declare, the more the PPA counterparty is forced to pay you. Basically, you are saying, look, we agreed that you will buy 100 from me. Here I am standing here, ready to show you that I'm ready to provide 99 or 100%. That means I have to be paid for my fixed cost. If I were to turn around and say, look, I know I'm supposed to give you 100, but my plant is aware I can only give 70, then I will obviously lose out. Please remember, this is not actual supply. This is your readiness to provide that supply. If you are able to show, and that is why it is called plant availability. So as you can see, this was one of the key things we focused on as soon as we came in. And we said, start improving plant availability. And we were in excess of 90% because 90% is the key feature. In 22, you will see it is 87%, but that is because there was and scheduled maintenance does not impact my fixed cost there. So net, we did not lose out anything there. The other thing is something called SHR, or station heat rate. We found out that, if we were able to reduce it, right, and this is the amount of heat required to generate 1 unit of electricity, we found that we could improve our profitability substantially. And therefore, as you can make out from this graph, we kept working on it and reducing the SHR. So in short, what I'm trying to say is that any business, you first come in and look at your key performance indicators and those that will impact your profitability. Your coal cost per kilowatt hour. If coal cost per kilowatt hour is important, I have to make sure that I start working towards improving my coal availability and reducing my coal cost. The next thing that comes from this is it is not absolute coal cost alone, because there are several types, several grades of coal. There is a full ranking on the basis of GCV. GCV stands for gross calorific value. So you could have two pieces of coal, the same size and the same weight, and yet the amount of heat one would give is half of probably what the other one would give. So we have to control what is called the coal cost per GCV. And then there are other things like, specific coal consumption, coal stock levels, etc. that will go. So the first thing that we do is in operations, understand what are the KPIs, how can we go about changing these KPIs to ensure that my performance starts improving. The second thing, and I've already covered this to some extent, so I'll try and be short here, is managing our liquidity and cash. So all the results that we were doing, and thanks to the moratorium, thanks to the fact that we were profitable at an EBITDA level, we focused on selling and selling well. We were able to declare much higher plant availability. Therefore, we were getting a much higher input for the power that we were providing. And whatever balance was, we were able to sell on the exchange at a profitable time. And therefore, we focused on improving our revenues, which in this period actually showed a CAGR of almost 13%. There was a very strong control on purchases. The key purchase obviously was coal. And before we commissioned the rail line and the wagon tippler, it was coming in what is known as the RCR, or the road cum rail route. And road cum rate involves, frequent loading and unloading. There are a lot of losses, and therefore the cost is so much higher, because obviously you have to take into account the cost of loading and unloading. So that was one thing. The other was a very active licensing with all the coal fields that we're providing, because cost, how you get it is one. The second thing also is, where are you getting it from? Obviously, our interest would be to get it from the coal wheel nearest to us, because then my transportation cost would be lowest. But then I also have to see, does that closest coal field, does it have a rail siding, or will I be compelled to get it on an RCR mode? So these are the things that we had to look at. We looked at all this and started changing our requirement. As part of the linkage, we could go to 3 or 4 places. We started going there, requesting for allocations, etc., increasing allocations from where it was better. And there, it helped that we were able to turn around the racks very quickly, or the rakes. If you go and tell a coal field, I'm taking coal from you, but I will return your rake after 4 days, versus if I'm able to tell him, look, I'm taking it, but your rake will be back with you by tomorrow. So these are the things that you have to use to get moving. And therefore, as you can see here, we were able to reduce our power and fuel cost, our expenses per kilowatt hour. A logical result of higher revenues, lower expense is EBITDA. I don't have to tell all of you what it means, but in the limited time we were there, we were able to show more than a 3%, more than a 3 times 300% growth in EBITDA. And a good combination of all this is our cash position. And this is something I'm very proud of. When we took over in July 2019, the total cash in the bank account was 7 crores. And when we left in August 22, this was the time we had already handed over everything. We actually left a cash balance of almost 700 crores. This is not counting collections, because obviously collections are running 2-3 months in arrears. And this is also considering the fact that we had used substantial funds to carry out all the capex changes that I have shown to you earlier. Here also, you have to have strict controls on the cash budget. We were controlling everything at work order, pay order stage itself. Make sure that everything was as per budget, nothing was going out of way. Make sure that the daily payment process, payment management was controlled strictly. We did not want things to lie around, funds lying around idle. And make sure that all stat dues and expenses were paid on time. Because all these are extremely important as far as the motivation of suppliers is concerned. I was talking about employees a while back, but suppliers also need that confidence that this company is not going to shut down, go bankrupt, taking all my money with me. They are continuing to pay me, and they are in fact continuing to pay me better than they were earlier. And therefore that confidence comes back, and we are therefore able to negotiate with them for better quality, better rates, etc. So all this happened. This was managing cash. The procurement process and was changed completely. This is coal as well as non-coal. It was a bit of hard work, but we said no. Every purchase order above 1 lakh will be reviewed by the team. I had a team of 4 people, relatively, not very senior people, but people who understood what they were looking for, and there was a tight approval process. I mean, I'm sorry, but any company that has gone into CIRP, you will find that some bad practices have also crept in over a time. A lot of things are taken for granted. The management has been busy fighting battles somewhere else, and they have not focused on the daily internal processes. There could be areas where people say, well, this is how we are always doing things, we will do. So we went in, tried to take a look, and really streamlined. Now, one impact is obviously the cash flow. The second impact also is, the people tend to pull up their socks and they say, yes, we mean business. We have to show a better performance. Our performance is being watched, and therefore everyone starts working more efficiently. So we established the systems. We did a full inventory management. I've already covered that. A very good offshoot was that in this entire period, we had zero delays because of unavailability of spares. I mentioned during KPIs that we don't want any downtime. And downtime because a spare is not available, we made it very clear it is not acceptable. And I'm happy to say that in this period, we had zero delay because of this. There is expense monitoring. Some expenses had to be done, some didn't. It involved a lot of meeting. I personally went regularly to the plant. I had regular, VCs and all. And sorry, maybe this is a good time to mention that COVID also happened in this time. So COVID meant while everything was under lockdown, we had to continue producing power here. And therefore, what we did was we made special arrangements at the township. There's a lot of people, actually commute from Jabalpur close by. We actually put up special arrangements within the township for them to stay there. And, in a very indirect way, it helped us because people were happy to get out of crowded towns and come here and work inside the township, so which becomes like a quarantine facility itself. So that is how we put it. We said, come here, why are you bothering? Anyway, you are under lockdown, kids are not supposed to go to school. You can come here, work normally, kids can come out and play. Nobody goes out of the compound, out of the township. But okay, you don't need to. And that is how we were able to present it. And therefore, we actually had better attendance during COVID than pre-COVID. And then cash management, cash flow forecasting, yes, mentioned. Coal planning and procurement, I have already covered this, but may be helpful if you can just take 2 minutes to read this thing. So broadly, we did a very good forecast thanks to the PPAs and the seasonality of demand. We did a good forecast. We laid down how much coal would be required, how much other things would be required, other stocks. We laid down the inventory, did purchases to make sure that we got the best possible levels, and we maintained it at an optimum level, what is known as the EOQ or EOR levels. I think this I've already covered. There is always requirement for capex, especially when a plant has gone into CIRP without being commissioned fully. But what I requested was for everyone to break it down into short-term, medium-term, long-term capex plans, and also on the criticality. So what is critical? So long-term capex, obviously, we were not keen because we won't be around. But as I mentioned before, there was one long-term capex we had to do, and we did, and that was purchase of a spare turbine. because we said that is way critical. If that goes down, the whole plant is gone for a few months. And just to tell you that there was another power plant close by, and they suffered a blast in the turbine. The plant was shut down. They were after us, saying, "Please, you have a spare turbine. Give us your spare turbine." We said, "Sorry." By that time, the resolution had been done, and we said, "Sorry, you speak to the new person." But yes, it cost them a huge amount of penalty for not providing the power. They were not able to work. So capex control was done all the time. And when we did capex, it was with a focus to improve operations and motivation levels, morale levels. On motivation and morale, I'll just come. There are a couple of other things I can point out. So I'm very happy to say that the Jhabua power plant actually achieved its lifetime high performances on most of the factors. Highest monthly generation, highest monthly EBITDA, highest plant availability, plant load factors. We kept the focus on safety. That's very important. Anything that goes wrong, I mean, the RP, COC will have something. So we made sure that we kept breaking all the safety records. We did 2 successful major overhauls, clocked highest annual revenue and EBITDA margins. Our role was extended because of COVID, but thanks to the confidence that the COC developed in us, and also that of the resolution applicant, that they requested us to continue this for 3 more months, because the successful buyer was NTPC, and NTPC said we would require 3 months to get together, all the approvals, the money, the structure to do. And I'm happy to tell you that instead of 3 months, we actually completed the handover in 2 months. And the part here where I mentioned, which tested my debt as well as equity understanding, was the fact that the successful resolution plan was actually one that converted the company into a 50-50 JV. So there were all 3 components. There was an upfront payment of cash, which obviously went to all the lenders and the creditors, operational creditors. There was part conversion of some debt into NCDs, and there was conversion of some debt into equity shares. And I must point out that normally bankers are averse to accepting equity shares as settlement. But over here, because they had seen what the plant was capable of, because they had seen that a plant which was giving 7 crores earlier was now actually sitting on 800 crores, 700 crores, they said that yes, now with a proven player like NTPC coming in, the performance can only improve. And therefore, they were a lot more willing to accept equity in lieu. I must share also that the dividend payments that the lenders have been receiving have gone towards reducing their liabilities substantially. The challenges over here were tremendous, because we are then talking about, banks will not hold individually. So we had to create a security trust where all the equity shares were held on behalf of the lenders. All that entire understanding had to be done. The NCDs were allotted to the various lenders. And this is where we came into a very peculiar but funny problem. And I'll show it to you as we go along. And then we also had to form a full new board of nominee directors. Obviously, directors have to be there. It's a 50-50 venture. So there were 2 directors from lenders and 2 from the buyer NTPC. And we formally handed over to the newly formed board from the monitoring committee once all the payment was complete. So this is in terms of what was there. In terms of what key learnings are, I'll quickly run you through, try to tabulate them. Of course, they are not, I won't say they are complete in all aspects, but yes. So for an RP, CIRP compliances are a non-negotiable part. I mean, you have no choice. You have to make sure that all your compliances are completely up to date. See, not only is this good practice, but I have felt it both from our regulators and from the NCLT also. If we are able to provide all the data that is required for all the information in the right format, well in time, I have seen the NCLTs also develop a lot of confidence in you. You know, once the CIRP is over, approval of the plan, sorry, not when CIRP is over, when resolution plan has been approved by lenders and submitted to NCLT, several times I've found it takes a lot of time. NCLTs spend time, they ask questions, they ask queries, etc., etc. And you know, there is a lot of to and fro happening. We made sure that our Form H is what is required to provide a kind of a summary of the entire CIRP to the court. We made sure that it was complete in all respects. All information as required was provided, and wherever required, we provided detailed footnotes explaining what the issue was. And not only that, each and every extension, and we had taken extensions, each and every change, each and every filing, the approval had been taken, and the requisite COC as well as NCLT approvals were also annexed. You know, I'm happy to say that the judge took 20 minutes to turn this around. He looked at the Form H, went through it, and he said, well, all information has been provided, all seems up to date. RP Council, anything you want to bring to my attention? COC Council, SRA Council, nothing? Okay, fine. So, you know, it has that effect. So please, I always tell people, make sure that your compliances are completely above board. Carry the COC with you. It goes without saying. You have to keep them informed at all stage. There are a lot of areas which are under the RP, but by that same token, the commercial wisdom finally rests with the COD. You have to keep the COC advised and develop that confidence that they ask you. You know, my first time when I asked that I'm going to complete the railroad, please allow that me to use that money, that discussion went on for hours. But 2 months later, once they started seeing the effects, they stopped asking questions, because you are able to develop that confidence and say that, yes, if you are doing this, I'm sure we are getting more money into it. And that is what they want. Make sure money keeps coming in, make sure there are no problems. They don't want anything else. And believe me, one reason why negotiations for buying took so long is that, you know, the 700 crores that was lying, who will take what? So that's a good situation to be in, where people say how it can be done. And best way to carry COC with you is to keep communicating with them. Even when you are not able to hold COCs, please send them a mail. And mail is something very easy. You just have to keep adding CCs, mark to one and all, and say that, yes, these are the objectives, this is the background data, this is the rationale explaining, this is why we are doing this. Let me know if you have a problem. Cash preservation, I've already said, don't commit to long-term spends. Please keep in mind that CIRP timelines are there, and you have to prioritize all CapEx accordingly. One challenge I faced, and all of you will face, is that some critical supplier or the other will come and say, I don't care. I am not going to wait for my plan. I'm not going to wait for 6 months, a year, whatever. you pay me right now or I will stop supplying you from tomorrow. I'm sure all of you would have faced this in your CIRPs. He will say nothing doing because he understands the supplier understands his monopoly position and therefore his bargaining power. So at that time it was not there. Thankfully now the RP can decide what is a critical input to keep the CD as a going concern. But what I did was I went ahead, I explained it to the COC, I took approval from the COC, and I filed an update affidavit with the adjudicating authority saying, look, I'm compelled to do this because I have to balance two things. I have to keep it as a going concern, but to keep it as a going concern, I will have to pay some pre-ICD dues. So that is the one part. There is a lot of time that can be spent on the execution of definitive agreements. And in our case, we had cash, we had NCDs, and we had equity. So you can imagine there were full sets of definitive agreements. And what we did was we moved that activity in parallel. Rather than wait for the approvals, etc., to happen, the moment plan discussion started, we started the preparation of definitive agreements in parallel, and we involved COC Council. We said, you have to be here. We cannot have people, finding fault with the agreement later on. I mentioned there was a very funny thing that happened, and just a small thing, but we have to be ready for fractional payments. The COC amounts are in proportion to their outstanding, their voting period, etc. Now, we decided to issue the NCDs with face value of 10,000 rupees each. How do you settle somebody who has to be paid an amount of, let's say, 5 crores, 65 lakhs, 241? They cannot take less, we cannot give more. So sometimes, these kind of small issues will come in, especially when you are doing a debt swap to equity, NCD, etc., because the instruments have a particular face value, but the amount payable can go down to as much as decimal terms. So the way we resolved it, we somehow prevailed upon NTPC to look, pay cash. The total amount payable in cash to make out this difference came to just about 40,000-50,000 rupees, and therefore they agreed. But we did that. And finally, one very important thing that happened, see, there is always a bit of a catch-22 when handing over. The lenders will say, give us the money, then we will release the security and give you charge. The buyer will say, please show me that everything is clear above board, it can be given to you, then I will release the payment. So obviously, these things cannot happen over 3-4 days. Add to it the fact that if there are 12 bankers, there are going to be 24 signatories from their side again, alone. There are going to be signatories on the side of the buyer, etc. All those issues are there. And obviously, the lawyers, etc. What gets done first? Will the trust deed be executed? Will the payment be made? This will be done, that will be done. So we prepared a long to-do list. There were 22 steps in that. And all 22 things had to be done in one morning. So we all went to the NTPC head office at Scope Complex. We requested for their large conference room. At one time, 12 lenders, NTPC, 3 sets of lawyers, company secretaries, other people, there were 65 people sitting in that room. In one corner, we had people who were getting everyone's signature on all the documents. So, we would call one lender after the other. All right, Bank A, please come here, start signing all the documents. We had to tell them beforehand, please get your authorized signatories, please get your board resolutions ready for signing. We had to we called all the potential nominee directors, we called all the company secretaries, and we also had the NTPC people sitting there ready to make the RTGS payment. And I personally took the company CFO with me with his laptop, saying, "You keep watching your bank account. The moment the amount hits you," we had prepared all payment lists beforehand, all payment orders beforehand. And in deference to the prevailing law, we said all OCs should be paid first. This is what the NCLTs prefer, and which is a fiduciary responsibility of the COC also. We said, please pay them. So all this work started at 10 o'clock. Finally, at 12:30, we reached a level where NTPC made the RTGS payment. 12:35, it was received in the company accounts. The company made payments to all operational creditors between 12:40 and 1 p.m. The bankers were all transferred the money between 1 and 1:15 p.m. During this time, all the other shareholding documents, the shareholding agreement, the share purchase agreement, everything, etc., was signed by all the people. And finally, everyone likes a little bit of pomp and show. And given that this was this important, I mean, we were very happy that Chairman NTPC, Chairman PFC, all the key directors, everyone was present there to take over. That big check is only for show. Okay, obviously, the real amount went through RTGS. So one last part that I said I'll come back and mention was the fact that, during the period of CIRP, I was mentioning I made regular trips to the plant. I was in the office regularly, and I did a lot of what are called town hall meetings, which is get everyone together and talk to them. And that is, again, part of communication. The communication you have to maintain with everyone, all staff, all people. See, if you put yourself in their shoes, you will realize that, they obviously are worried. They don't know what is going to happen to their job, to their lives, whatever. So whatever you can do to set that at ease, without telling lies, of course, you have to tell them the truth, right? You have to tell them the facts and take through. And believe me, it really pays off. So Kishorji, I have spoken for a long time.
Yes,
I'm
sir.
done. I hope I'm on time, and
Yes, sir. Perfect.
very happy to discuss any things that people.
Yeah. Yes, sir. There are a few questions, of course, sir.
Certainly.
Yeah. First of all, I'd like to thank you very much for your detailed deliberation, explaining us the intricacies of the complicated yet very interesting case of Jhabua Power Limited. The one thing which I, of course, imagined and was laughing, CFO watching his bank account of the company, and maybe some paying also some operational creditors and all.
No.
One great achievement done by you and your team, 700 to 700 crores. It's
Thank
really
you.
a big achievement.
Thank you.
You were there to use pandemic as blessing instead of a problem or hindrance there. Yeah. I'll just take a few questions, sir.
Certainly.
The first question I received is, if an operational creditor claims has not been considered, what remedy he has when resolution plan has been approved?
Okay, this I think is a general IBC complaint. See, while it may sound cavalier or, I'm thinking, the fact is that the RP cannot do anything. The RP's job is to confirm the claim as per the records of the company and as per the documents supplied by the operational creditor. See, it is perfectly possible records could have been misplaced at the company, in which case you will ask the OC, and the OC is supposed to provide those documents. But, it's very rare that documents go missing at both ends. It doesn't happen. In fact, we did have a case. There was an operational creditor who said I was asked to do something extra for which I was promised double. And therefore, my claim actually is double of what you have admitted. So, unfortunately, given the way our legal system is, everything, the proof has to be provided. The RP cannot exercise his or her personal judgment. RP cannot say, no, he seems to be truthful. Sorry, the courts will not accept that. So you should follow the same process as the court. Demand the proof. If the proof exists, admit. If it doesn't exist, please apologize.
Yes, sir. The second question is, as per approved resolution plan, all share capital and rights of equity shareholders shall be extinguished. After CIRP process, in new balance sheet, share capital will be zero. Whether reserves will be made zero or not.
Okay. So this is a very hardcore structuring issue.
Yeah.
See, everything depends on what the plan envisages, right? It depends on what is happening. Is it a takeover? Is it a merger? Is it a joint venture? And this is where, the appropriate corporate action would be done. In most cases that I have come across, extinguishing earlier equity completely becomes very difficult. So what I have found, and I could be wrong, there could be cases, what I have found is that most buyers issue a new series of equity shares.
Yeah.
And they issue that equity share at a valuation such that the previous series of shares, while they are not extinguished 100%, they are reduced to less than insignificant thing. That is how it functions. Now, whether the rights would be extinguished, etc., etc., you would need to figure that out, because in a private limited company such as Jhabua, you can certainly do that. You can reduce that to a certain to that extent. In a listed company, you will open a completely new area altogether, and therefore you will have to definitely consider this before takeover, that the resolution plan will have to envisage how this will be done. In terms of reserves and surplus, again, it would have to be decided by the SRA what level it would be kept. But you would be aware that the law requires that all resolution plans at least talk about how fresh funds will be infused.
Yeah.
So over and above what you are paying FCs and OCs, you have to bring in the fact that, yes, this company requires so much money, I will infuse so many funds like this, etc., etc. This needs to be done. So all these things have to be taken into account.
Yes, sir. Thank you. The next question is, one of the big challenges in CIRP is managing the affairs of the company. The challenge is even more if the company is large. How do you think a resolution professional can work out ways or methods in managing such affairs of the company?
Thank you. I think I covered quite a bit of this.
A bit, yes, sir.
So 2 or 3 things here. See, one is, please develop the ability to understand, think on your feet, understand the key components of business. All businesses more or less are the same. As I said, there is an input, there is a conversion, and there is an output. You just need to figure out what those things are. Secondly, you will never be able to understand the intricacies and the nitty-gritty of each kind of business, because every business is unique. RCR in coal means something else. RCR in private equity means something else altogether. RCR in politics is, I think, racecourse road. so everywhere, the definitions are different. It would be helpful. One, of course, is that you understand something about it, go on to a steep curve. But secondly, at least if you think that this is large and would need support, please take along an industry expert in your support team. See, support teams are a must in these things. No single RP could have managed this. I wouldn't have been here talking to you had I gone in alone in something like Jhabua. I'm sorry, it just wouldn't have happened without the team that I had. And the team is there, it helps you not only to manage, but also they are your eyes and ears on the ground. I cannot be talking to all people everywhere, stores people, purchases people, operations people all the time. So you get a true feeling of what is happening there. And the third, of course, is experience. I think there is a reason why it has been specified that to become an RP, you need at least 10 to 15 years of experience. And I think at the end of the day, that experience and your ability to manage people, whether it is management, whether it is staff, whether it is creditors, whatever, I think these are the key things that you need to look at. Of course, I have looked at a few things in my presentation, so I won't get into that right now.
So you have to really work like a CEO there. You manage everybody, everything.
I said this is the third part of your RP's role.
Yes, sir.
You being and running the CIRP, doing investment banking is one, but you have to. In fact, the law does envision that the RP is the CEO.
CEO of the company. Yeah. Yes, sir. The next question is, what strategies need to be undertaken by the resolution professional to maintain the going concern status?
See, I don't think you can tick mark, few things. This is not a checklist kind of a situation. There are several things that you need to look at. First and foremost, you have to determine whether the corporate debtor is making money at the EBITDA level. And the reason I'm saying EBITDA level, all your expenses are taken care of. Because if you're not able to pay salaries, if you're not able to pay suppliers, then obviously, you have a very different question. The second thing you have to look at is how important is it to keep the operations running. In 90% of the cases, you have to. I mean, if I have to sell a car, I'll go back to my example. Should I keep it in running condition or should I keep it locked up for 1 year? There's a reason why every car ad says in good running condition. Nobody says locked up, untouched car, right? So the value is enhanced only if you are able to demonstrate that this is in a good running condition. So you have to work out that, yes, if it is important to keep it in running condition, where do I raise the money from? Or if it is profitable, then I know I will try to improve that. In both the cases, like I said, look at the basics of business, try to see how you can reduce costs and improve earnings and move towards profitability. The last part here is the human angle, the human resources. You have the company management, you have the company workforce, everything, you have to talk to them. Make sure, because see, at the end of the day, it is not the RP who will come in and fire the boiler or, put the switch to start supplying electricity, etc. It is these people who will do it. So you have to go to them, make it very clear that, yes, these are the steps needed before we can get back to some semblance of normalcy. If you think that you will not be paying for 2 months, please say it so. Please say, I'm going out, I'm trying to raise funds. In the meantime, if you continue running business, we won't need funds on an ongoing basis. So regular communication there is a must. I will not say it helps, I will say it is a must. Yeah. So these are a few things that you have to keep into account. Look at the basics of business, try to ensure where the funds are coming from, keep the COC and the workforce with you.
Yes, sir. Yes, sir. The next question, I think every IRP or RP must be asking, how to deal with non-cooperation from the erstwhile management?
Take it as a given. Please take it as a given. Okay. And, there are all kinds of Section 19 applications that we RPs are very fond of quoting. I will do this, I will do this. At the end of the day, right, it doesn't work. So you go in mentally prepared to expect that you are not going to get that cooperation. And it is not just the top management promoters. The key thing in any CIRP is the finance department. And you will all agree that only the closest confidants of the promoters go to finance department. Correct? finance department is always under the tight grip of the promoters or management, whatever. So the starting point is go in assuming that you will not get it.
Okay.
The second part, and this is where this is important, it is a fact that, the RP had no idea who the promoters were. They had never met the CFOs before, whatever, etc. I have found that it's not a panacea, but it helps a lot to have a frank and open chat with them. And say, look, I'm not here to take away your business or whatever. I have been appointed by the court to do a duty. It is my duty to run it properly. And it is in your interest to help run it, because at the end of the day, they are your people. The entire workforce is yours. The management is yours. The people, the least you owe them is, to ensure that they continue to earn their daily bread. If you try to drive this business towards closure or bankruptcy or liquidation, they are the ones who are going to suffer. So I am not asking you to stay away from your legal options, but don't let legal options interfere with daily operations. So these were some of the things that we tried. Sometimes it works, sometimes it doesn't work. In this case, two factors. In Jhabua, two factors helped me. One is that the promoters were actually 2 levels above, because this was a subsidiary of the Balarpur group, right?
Yeah.
So there were two or three levels away. Though some of the key people from the Holdco came down, met with me, but we said, let's meet over a cup of coffee rather than, trying to fight. Or we will meet in the courtroom, no doubt. But you are doing what you are supposed to do. I'm doing what I'm supposed to do. The second thing, of course, was that they had problems of their own. You all would be familiar with that. But sometimes it helps to have a frank chat and say, look, we all need to do our jobs. Let us complete this. Of course, it doesn't work in all cases. I have come across several cases where, in one case, 9 months had passed. I could not even get entry into the offices, much less access to any records or whatever. I kept filing application after application. In the meantime, these people had gone all the way to the Supreme Court and finally managed to get a stay on the process altogether. Right? But as long as you are seen to be doing your duty to the best of your abilities and you're able to demonstrate it to the COC and NCLT, I think it should be good.
Sometimes the coffee with RP can help.
Coffee with the RP will definitely.
Yes, sir. Yes. So the next question is how to save a company from going into liquidation?
I think, like I said, it is related to what we discussed earlier as a going concern. If you are able to demonstrate that, yes, the company can be run profitably.
Turned around, yeah.
It can be run profitably. And, like I said, the moratorium is your friend. So the CIRP period is a very good period to demonstrate that, yes, the company will run. Of course, larger business decisions will need to be taken. I mean, like I'm very fond of giving a few examples. If I am the CIRP of a company that makes kerosene lanterns, it doesn't matter how efficiently I run. Or if I make 6-inch floppy disks, that time is gone. I mean, it doesn't matter if I'm able to show that, it was running in loss, I brought it to break-even level. I may have improved performance, but it's not a long-term factor.
Yes.
So you would have to take these things into account, along with all the other things that we discussed in the last hour.
The next question is how to take care of various compliances during the process.
Do them.
I think the team.
Do them. There is no way. But yes, there are certain levels that can help. See, compliances come across all levels depending upon what is the nature of industry. For an RP, first and foremost, make sure the COC, NCLTs, IBC related compliances are met. All your disclosure requirements, all your updates, etc. The second thing, again, when you try to understand the business, please try to understand what are the key compliances that can derail you. Okay, a lot of these compliances have quasi-criminal consequences, in which case the moratorium or IBC will not save you. Right? So you have to have a good understanding of what is happening. For example, any factory will have a whole host of factory-related compliances. Everything from pollution to safety to access to, boards being displayed correctly, boards being in the right thing, etc. There is a huge extent there. Something like a power plant will have its own pollution related, its own treatment plants, effluent treatment, etc., etc. Things will happen. A hospital has its own compliances related to medical things, etc. So unfortunately, there is no choice but to try and meet them as much as possible. You have to piggyback on the existing compliance officer, because you as RP will understand IBC related compliances, but you have to piggyback on them and tell them, look, the compliances have to be done. You have to piggyback, work with me, I will work with you, we will sort this out. In fact, now it has come down, but in the initial stages of IBC, all regulatory authorities which had been sleeping for 3, 4, 5 years would suddenly find, okay, there is one guy whose collar we can catch, let's catch the RP. Now that the RP is there, he is supposed to complete all compliances. So that now hopefully is coming down, but it was a fact. I mean, I can share with you one of the first cases I handled. The audited accounts had not been submitted for 3 years. And yet, within 1 month of my taking over, I started receiving notices saying, you have not completed your audit, please complete your audit by this account and deposit this. Because they said now that it is in the public eye that this case has gone to CIRP, let's get this completed. So all these things will happen, and really no RP can realistically hope to understand all compliances across every industry. So you have to piggyback on the existing people. And like I said, in certain cases, it helps if you take along an industry expert, especially in the larger cases, to make sure that nothing is missed out.
Rita ma'am, 2 or 3 questions, if time permits, can we take? Rita ma'am?
Yes, maybe 1 or 2, sir.
Yeah, only two more. What are the challenges in availing interim finance during CIR?
I cannot answer it in 2 minutes.
Okay.
I'm sorry. This
No
is
problem. We go to the next
a separate
question.
topic.
Okay. Will the tax authorities, direct or indirect, and labor departments, PF, ESIC, etc., grant moratorium on reduction in interest or penalty?
No.
Okay. The last question, sir. How did you build the cash reserves for capex in the initial step for resolution, since the company has no cash to pay the creditor?
Yeah. So, like I said, use the moratorium as your friend. Make sure that only the essential ones are paid first. And thankfully, like I mentioned over here, the company was profitable at the EBITDA level, which means there wasn't too much of a problem with most of the suppliers, employees, etc. We started working on that and gradually, start identifying key issues, do a kind of an ABC analysis. We said most important is the coal. Yeah. Let's start reducing cost of coal. We reduce cost of coal by 5%. My revenues goes up by that much amount, right? In fact, profit goes up by that amount because even everything remains. Right? And then, gradually start working on the cash reserve. Yeah. So there are a lot of aspects. In Jhabua, I think I've explained it in the slides and you can share it with them. Other cases, obviously, you would need to work out accordingly.
I think that's all. I think everybody should be satisfied. Questions are really answered well. The case explanation was really very good, sir. Thank you very much, sir. Thank you.
Glad you liked it. It was a pleasure.
Yes.
To all of you. Wish all of you the very best and thank you once again.
Yes, sir. On behalf of Committee on Insolvency and Bankruptcy Code of ICI, we would thank both Abhilash ji and Pahuja ji, especially Abhilash ji for taking us through the important aspects, challenges, in conducting the CRP of the case and sharing with us the key learning, which is so valuable for all the participants who have joined today in this webinar. And thank you, Pahuja ji, for facilitating in taking the questions of the participants who have joined live and putting before Abhilash ji, who answered all of them very patiently. All the questions have been answered. Thanks indeed to both of you, sirs, on behalf of the committee.
Thank you so much.
Thank you, Rita. Thank you.
Thank you.